And welcome everybody to another Smart Money Circle update. I'm Adam Sarhan. With me today is John Buran, who's the CEO and president of Flushing Financial Corp. Ticker symbol is FFIC. John, thank you so much for taking the time and coming on the show today.
Thank you for having me, Adam.
So I always like to ask, John, can you tell us your background and how you got to where you are today? I know you have a fantastic story and we're looking forward to hearing it.
Sure. So it's very interesting. Didn't start out as a banker for sure. So following my graduation from New York University, business school I had gone to, this was in the early 70s. There wasn't really too much out there on the job market. I wound up working for an attorney who owned a number of houseware stores that are located in Manhattan. And that's what I did for about 2 or 3 years. Turned out to be a very, very intense job. I got involved in every aspect of the business, hiring people, firing people, dealing with marketing. It was kind of a one-man show pretty much. But it was very, very interesting at that point in time. Then later, decided that I had to. This was taking up a lot of time, so this particular job, so it was like more than a 6-day-a-week job. So I was going to graduate school at night, and at that point in time, I decided, well, I've got to change careers because I'm not able to do both. So I started working for a pharmaceutical firm. They used to call them detail men back in the day. And as a detail man, I went around, selling, promoting pharmaceuticals to various doctors. Did that for about 4 years. Finished my graduate school, and then I happened to be at a recruiting seminar that Citibank held, and got interested in the business, and the career took off from there. I spent 17 years at Citibank, did a variety of jobs, finance, ran branches, did small business, ended up then later going to NatWest, Fleet Bank, doing some consulting. And then a headhunter contacted me and asked me if I wanted to be the chief operating officer over at this, what was then a $1.2 billion thrift, Flushing Savings Bank, which we later changed to Flushing Bank and made it a commercial bank. So that's how I wound up that's pretty much the short version of how I wound up in the position.
Wow, I love that story. It's funny because in grad school, I used to work 5 days a week and go to school 5 days a week. So that's 10 days in a 7-day week. So I'm very familiar with that process and that journey. So let's talk about the business itself, what you do. You've navigated, hats off to you, an extremely difficult environment this year for regional banks. By all means, please let us know what Flushing does and we can go from there.
Sure. So, Flushing Financial, obviously the parent company of a bank. The bank was founded in 1929, went public in 1995. We're predominantly a lender of commercial real estate and also lending to businesses in the New York metropolitan area. We got very, very strong relationships with our communities and with our customers. The loan portfolio tends to be focused on real estate. About 88% of the loan portfolio is collateralized by real estate. We kind of consider ourselves to be experts in this area. We do a lot of work with rent-regulated apartment buildings in the New York metropolitan area. It's a mainstay of our business, and then we do a lot of commercial real estate in the local communities. It's mostly in Brooklyn and Queens. We certainly do a little bit in the medical area. We do a lot in small retail, in kind of the basic types of real estate that is necessary for a community to work on a daily basis. So We're not doing the big malls someplace in the suburbs. We're tending to do smaller strips of local businesses, the food store, the nail salon, the pizza place, et cetera, all of which support an apartment-based community in the New York metropolitan area. So, we also have a small business portfolio, and that is basically lending to manufacturers, wholesalers, all different types of businesses. It's a very, very diversified portfolio, and over the years, we've done extraordinarily well in terms of managing credit. During the Great Recession, we had about 64 basis points was the maximum amount of losses that we took in that portfolio. So the rest of the industry was about 5 times that amount. So that's the mainstay of our business. Deposits we gather from the local communities and businesses. And, we have a very strong segment in the Asian ethnic markets within New York City. So Flushing is a very strong area. Chinatown, of course. Other areas of Queens and Brooklyn. So it's a very, very diversified business, and we've been very successful over the years and dealt with a lot of, as you mentioned in your earlier comment, a lot of the risks that have been associated with banking over the last 20 years or so. And we've seen all of them, and we are, knock on wood, we're still standing.
Yeah, it reminds me of Elton John's "I'm Still Standing." Yeah, yeah, yeah.
Right.
That kind of thing. So super. I mean, hats off to you. Super well done. Not only navigating the recent turmoil in the regional banking space with Silicon Valley Bank and Signature, etc., but also going back to 2008 and successfully navigating that. So, John, you've mentioned some of the competitive advantages, but just for investors, just to be really clear, what are the competitive advantages that you'd like, or the messages that you'd like to send to investors? I know the stock is extremely undervalued. You've done a phenomenal job navigating a very difficult environment. You're set up for growth. You've got great numbers across the board, but by all means, the floor is yours.
So I think the most important thing to be thinking about these days is that we're a low risk business. We're a business that understands the markets that we're in. We don't go too far afield from what we from what we know. We stick to our knitting, and as a result, we've been successful over the years. We pay a very, very nice dividend. And that certainly is something that people who are looking for regular income is a big positive. And we're very, very close to the communities that we serve. So when you think about our focus on the Asian markets, we're very much involved in community events. So a group of our staff will be competing in the Dragon Boat Festival that takes place in Flushing Meadow Park every year. Amazing event. Thousands of people come there, and we're very, very good competitors in terms of that the area. We're very much involved in the financing of a large healthcare facility, the Charles B. Wang healthcare facility that serve the Asian community. So these are the types of things that we do in the communities that we serve, so that it's not only lending to businesses and lending to real estate investors, it's also being part of the community and being recognized as a part of the community. So when you think about community banking, that is really what it's all about. That's what distinguishes us from the larger institutions that are out there, and we've been very, very successful in doing that over the years.
What a great way of looking at it from that point of view, because most people don't quite understand the difference between regional banks and the larger banks, but that's a great way of just framing it for people and helping them understand. So John, next question for you, risk. How do you handle risk? Because you're a fantastic risk manager, and the fact that you've navigated 2008 and 2023 and kept those losses, like you said, 5 times smaller in 2008 than your competitors, and navigated this whole debacle earlier in March without even sneeze is just fantastic. So how do you handle risk is the first question. And what mistakes do you see people make with respect to risk management, and how do you avoid them is the second?
So I think the most important thing to recognize is that risk has to be managed, not avoided. Clearly we're in the business of taking and managing risk and being successful at it. So we try to take a very holistic approach to the very understanding the various risk categories that might impinge upon our business. But also ensuring that the interactions between those risk elements are taken into consideration as well. So there's a quote from I think it's been attributed to Walter Wriston, that risk always comes through the window that you're not looking out of. And I think it really, it's really a lesson for what happened in this most recent crisis. So you had unusual events taking place. You had a concentration of business in certain areas. You had, not being prepared for liquidity crises. You had the acceleration of not only communication, but the acceleration of the movement of money, both of which have been trends that have been building over time that, it really have been in the background and not really thought about as risk elements. So, I think what tends to happen with risk that is problematic is, or people's management of risk that's problematic is, you look at what happened in the last risk event, and you create this Maginot Line, so to speak, that you think is going to protect you, and what happens? It's coming at you from a different direction. So it's really got to get down to basics, understanding what types of risk are you dealing with, what are the interactions that could possibly take place. So there's it's really art and science put together, and I think it's important. It's so critically important, especially in this day and age where you've got an acceleration of cyber risk, you've got acceleration in the movement of money, acceleration in communication, all of which is somewhat new to this environment that has to be layered on top of the traditional categories of risk like liquidity, reputation, et cetera.
No, I love that. That's actually a really, really good way of learning it. I love that risk comes in the window that you're not looking at. That's a great, great quote because it's so true. And I love what you said, that risk has to be managed, not avoided. That is so powerful. So incredibly powerful. Okay, John, next question for you. What are some timeless lessons you've learned along the way, along your career, that you'd like to share with the audience, please?
I think the most important thing is that in managing a business, the assets are really your people, and particularly in the financial business where we're dealing with, we're really dealing with information, we're dealing with intangibles, et cetera. Not that money is not tangible in some degree, but we're really dealing with information. So, from my perspective, the biggest lesson is people management, finding great people. The value of finding great people is really, it can't be replaced. You can't take the mediocre and change it. You're better off trying to find people with significant abilities and then creating an environment that nurtures them, that gives them the opportunity to contribute and to create, and then to reward them as much as possible. I think you need to have open dialogues. You need to be able to, allow for different opinions. You really need to have a team that can argue about the direction, but yet come together when the executional part takes place. So you really want to value all of those opinions, get them together, come up with a direction that makes sense, and then everybody gets on board to execute. And we think we have a team where that works very well at Flushing.
That's actually a really, really, really good way of looking at it. People are your most valuable asset. It's not the money, it's not the other, it's the people first, because they're the ones who help the business function. Without them, there's no business. So well done. How about timeless mistakes you've seen people make and or you've made and that you'd like to share with the audience?
So I think the most important thing is getting stuck and doing things that doing the same thing over and over again. And what tends to occur is that you become successful in a certain area, and it becomes a model for yourself, or it becomes a process. And you get stuck in doing the process, repeating the process and repeating the process, and you really never look outside the four walls of that process. And I think that winds up catching up with you at some point in time, because the world keeps on moving. The world keeps on moving quickly, and you need to be able to respond, not only respond, but you need to be able to look forward and see what is coming on the horizon. Bring that back to, or make sure that everybody is looking at that horizon to some degree, but clearly a leader has to be looking at that horizon and saying, okay, this is coming down. How should we be thinking about, how would this affect your part of the business? How would affect your part of the business, et cetera. So you get a holistic view of what the impact to the organization might be, and then come up with a plan to deal with it. So I think there's myriad times where we've seen a situation where either we watched others or ourselves be a little bit slow on the mark and say, gee, I missed that thing. I should have seen that. Or somebody in the organization who had a more direct line should have raised their hand and said, hey, John, I'm looking at this in my area of the business. How do we bring that forward? So I think having that dialogue and having an open level of communication is particularly critical in allowing this fast-moving environment, the elements of this fast-moving environment, to bubble up quickly to the top, so that senior management, executive management can deal with it before it either becomes a problem or before you miss an opportunity.
Do you think people are creatures of habit? We understand that. So if you're in the habit of doing something and it's working, that's fine for the time being. But if you're not taking a moment or a few moments and looking forward at what potentially could go wrong or what could change, you're going to keep doing your old habit, and then the environment changes and you're still doing the old thing. You're not getting the results, and things could break down that way.
Exactly.
Yeah, that is really, really powerful. All right, John, what makes a great leader?
I think what we talked about earlier, what makes a great leader is really just being able to bring together the team, first selecting the team, bringing them together, and then creating an environment that allows for their creativity and their contribution to flow through. That to me is the most critical aspect. Allowing that, and I have to say I was fortunate in my career to work with a great mentor over at Citibank who was expert at doing this. And sometimes as a more junior manager, sometimes I felt, well, this is a little bit chaotic or whatever, and then all of a sudden the results of that quote unquote chaos came through, and it came through in a very dramatic way, in a very positive way for the business. So I think it's important to understand that, understand that dynamic and how it works. Again, going back to the whole idea that people are your asset in this business and in so many businesses today. These are not, the financial business particularly is not a mechanical business. We don't make things.
Right.
We gather information, we move that information around, we put the elements of that information together so that we can gain some sort of competitive advantage. And that's what we try and do with Flushing.
So every great leader, even great businesses, you yourself have overcome obstacles. What are some obstacles that you've had to overcome in your career? How'd you deal with them? Was there an initial shock, and then did you pivot and adjust, look for the good or the blessing there? If you can speak about that a little bit, we'd appreciate it.
Yeah, so well, in my years of banking, we can tick them off. The great financial crisis in 2008. You got Hurricane Sandy. You got the most recent liquidity crisis, and all of these things have various elements that are very much in common. And first off, they cause disruption, they cause fear, they cause disillusionment. I mean, people say, well, gee, we had this strategy and now that strategy is not working. And that either could be the case, or maybe it's that the, market moved away from your strategy, or maybe you were stuck in your strategy. So I think then the most important thing from my perspective is you kind of just take a half step back a second, assess the situation, understand what is controllable by you and what is not controllable. That's particularly critical. Deal with the people aspects of this, the fear, the disillusionment, the tendency also to jump at a solution without understanding the problem fully. These problems are often multidimensional. The solutions are multidimensional. And as human beings, we try to jump on the first potential solution and think that that's going to be it. These are complex problems, and it takes a while. The other thing is, from a personal perspective, to be able to just pull yourself away from the problem every once in a while, because the solution is rarely something that you're going to work on feverishly. You need to pull back. You need to give yourself some room to get out of a monoline thinking on something and open yourself up for a variety of solutions to these problems, or else you tend to be working, it's like the old thing that to a man with a hammer, everything looks like a nail. Well, you get these situations where people deal with problems in this manner, and because they've been successful once, they can think they can be again. But every problem is different. Every problem has different dimensions, and we've got to recognize not only the dimensions of the problem, the interactions of the causes of the problems, and thereby develop solutions. But we also have to deal with the people aspects of this, and how this is affecting people, and what might be going on in their own lives that may impinge upon what's occurring in your institution.
No, that's really, really powerful. So what you're saying is, when obstacles arise, just to make sure I understand properly and share it with the audience, is to step back for a second, almost like remove yourself from the equation, make sure you can see the entire view, because it's not just the shock of the adversity or the obstacle. And then ask yourself what you can control, and what you can't control. Focus on what you can control. And then take some more time to say, okay, take even a further step back if needed, and get away from the problem to clear your head, and then give yourself time for that solution to arise, and not force it with the first thought that pops in your head, because most people want that instant gratification of like, okay, I'll solve it right now. Just take your time and think about it, and then come up with the solution that way, and incorporate others as well. Is that a good summary of what you just said?
Yeah, I think so. I think my approach to dealing with any situation is that there's a variety of responses that run from take a swing at it now, to to really assessing the problem. And every problem is different in that degree. Obviously, if tomorrow morning you find out that your largest customer just pulled $80 million out, you can't wait around to respond to that. You have to jump on that right away. But most of the problems that we confront are of a longer term nature or an intermediate term nature, and most of them are much more complex than a very, very simple solution. But there's nothing that substitutes for understanding risk in general and being prepared, so that when adversity does strike, you already have some idea of where it's coming from.
Smart. It's almost like you're anticipating what could go wrong and then have contingency plans lined up. So if and when it does happen, you have a game plan, so to speak, and you're not left in a tailspin.
Right.
Yeah, I love that, John. Okay, final question for you. What's the best piece of advice you'd like to share with the audience or give your 30-year-old self?
My 30-year-old self. Let's see. In contrast to the discussions we've been having about risk, I would have advised my 30-year-old self to take a little bit more risk and really understand a wider variety of areas before I decided to settle in on a career. I kind of wound up, through serendipity. Not that I've come to love it. And that's fortuitous that I've come to love what I do, and I love this business. It's fascinating, it's stimulating. But I think going back to my 30-year-old self, I wouldn't want to rely upon serendipity to get me into the right place. I would have really broadened my outlook and my outreach to things so that I could find the right spot for myself. But I think I did. Even though it was by accident.
No, that's awesome. I love that. So it's almost like you're saying to your 30-year-old self, take the risk or be more comfortable managing the risk instead of trying to quote unquote avoid it or go with the safer route.
Yeah.
Is that weird? Yeah. No, I love that. That's really, really powerful. Well, John, thank you so much for coming on the show. People can learn more about you by going to the website, ticker symbols FFIC. Any final thoughts that you'd like to share?
I'm just happy to be here. We're in a great business during a challenging time, and look forward to talking with you sooner or talking with any of the investors that are interested.
No, we love it. Hopefully we'll have you on again soon. This has been absolutely fantastic. Thanks, John.
Thanks a lot, Adam.